With the Fed on deck tomorrow, sloppy trade in the markets as we predicted. More on that coming up next. Yesterday morning, we discussed the fact that we could see some sloppy trading this week in the markets, particularly with the Fed on deck on Wednesday to talk about their monetary tapering practice, as well as options expiration this coming Friday. Of course, right now we have a lot of put options, a lot of call options out there. All those are going to be rolled over come this Friday. So again, traders now beginning to reposition for that eventuality later this week. Again, that led to about a 1% sell-off yesterday. This morning, markets are looking a little bit weaker at the open, but again, not surprising here for this week. As we've talked about here over the last few days, expecting some sloppy trading here. The 20-day moving average is just below where markets are sitting now. That will be important for stocks trying to hold that level today. If not, we're going to retest that 50-day moving average, which is slightly below that. So again, not a lot of downside risk here this week, but certainly a bit more sloppy action would not be surprising. That would potentially set the markets up for this kind of the end of the year rally back towards all-time highs in the markets. Now, the interesting thing here is that the Bollinger Bands, 2 standard deviations above the 50, not too far above current highs. And that, again, we could set new highs by the end of the year. That would not be unsurprising here. There is a risk, though, that if the market does break this 50-day moving average, there is risk down to the 2 standard deviation band below that. So again, as always, there's no guarantees in markets, of course, and statistically speaking, we should see that eventuality of a rally into the end of the year, particularly the fact that we've got our money flow buy signal in place. Markets are a little bit oversold in the short term, and again, that's why a little bit of sloppy trading this week. Not surprising, work off a bit of that oversold condition, again, setting markets up for that rally into year end. Another interesting side dynamic of the market, of course, is in the cryptocurrency space. While the major markets have been holding up near all-time highs, a lot of these other alternative assets, smaller cap names, as well as these cryptocurrencies, have been under a lot of selling pressure as of late. Bitcoin is currently trading down 2 standard deviations below its 50-day moving average, is very oversold, and just flipping back onto a buy signal. Now, the money flow signals don't work as well in cryptocurrency as they do with individual stocks, but there is suggestion here that we could see a rally in Bitcoin heading into the end of the year as well. Again, that tends to be a bit of a risk-off asset as well. So when markets are rallying as a whole, Bitcoin tends to kind of rally with that. Again, Bitcoin's been leading this current kind of sell-off we've been in. So again, not surprising there, but this is really a bit of the same thing that we've seen kind of across the board in a lot of the stocks that currently trade below the surface. One of the best ways to kind of look at the narrative that's been going on from the headline stocks to those underneath the surface is by looking at the ARKK Fund. ARK, of course, is Cathie Wood. She's the one that was hailed as the greatest investor since Warren Buffett in 2020. This year, the ARK Fund has been under a tremendous amount of pressure. That fund down about 20%. Now, here's the interesting point about this is that the S&P's up about 25%. Her fund of these stocks below the surface, and again, we have an article on our website today talking about wipeout. These stocks below those top 10 stocks in the S&P 500 index have been under a tremendous amount of pressure. So again, when you take a look at what's happening in the overall index, it's not really that representative of what's happening below the surface. So again, as we start to move into the end of the year, expect a rally, but that rally is likely to be concentrated in most of these larger cap names in the stock market. So be careful of what you own and where you own it. Valuations are currently extended everywhere across the market. And with the Fed starting to raise rates next year, 2022 might just be a very different year for you and your money. That's 3 minutes of markets and money. We'll see you next time.